Hey everyone, welcome back. In this video, I'm going to go over a little bit of the fallout of what's been going on inside the U.S. markets ever since the Evergrande situation started picking up steam this past week. So just to recap right quick, Evergrande was China's second largest real estate developer, and they just missed their first interest payments on their debt this past week. And because of that, it has signaled that they are most likely will enter default and default on their loans and go bankrupt. And then this could have ramifications throughout the Chinese markets. It could potentially cause a credit freeze in the Chinese banking system, depending on how overexposed China's banks are, and could really lead to a 2008-like situation for China. Now, that being said, because China is such a large economic market globally, this has depressed asset prices all across the world because they investors, are looking at global economic effects, and a drawdown or a drop in economic growth in China could have, reverberations throughout other global markets, because the Chinese export a lot of goods to other countries, especially to the U.S., who imports a lot of goods for China. If China's all of a sudden productivity starts to drop and they are no longer able to produce goods or produce raw materials or anything to ship to the U.S., then the U.S. is going to have to find some other supplier for its materials and resources to complete those goods and bring them out to market. So those kinds of disruptions that could be happening within the next months or year or two could have some significant downturns. On the other hand, it could also be bullish for the U.S. markets because the Chinese also use up and consume a lot of resources on the market, a lot of capital investment, and now that capital will reallocate out of that country to other countries, especially the U.S. would stand firm to gain from that. So it could be that some of the industries that were shipped overseas to China could come back home. But a peculiar notion that I'm going to touch on, and then I'll give you my reasons on why I think this is happening, is that asset markets in all three categories, that is equities, debt instruments, bonds, and then precious metals, have all been dropping for more or less for the past week. So if you look at the Dow Jones, they've been on a downward trend, and they've really been on a downward trend since they peaked in mid-August. But the deterioration of the Chinese economic markets, especially revolving around Evergrande, has sort of caused a drop in the Dow. Now, they did start recovering their positions later on throughout the week, but you could see here that starting on Friday and then on Monday and Tuesday, as it was released that Evergrande will default on some of their debt, they will start missing some of their interest payments on their debt, really caused a panic, at least temporarily, inside of the equity markets. In the bond markets, you can see that the bond interest rates started to go up in mid to late September after they had bottomed out in late August. Okay, so they really started to pick up on September 17th. They sort of recovered their positions in the beginning of the week, and then they went up in the mid to later part of last week. I'll go into what I think is going on there in just a second. But then lastly is take a look at what's been going on with gold and silver. When the Evergrande situation come out, you can see gold and silver start plummeting, okay? And that was a huge drop that we saw in silver, and, a significant drop that we saw in gold. So with all that's been going on, shouldn't disruptions and uncertainties in the market start be pressing up precious metals? Well, yes and no. On some level, yes, but also the major reason, at least from the short term, would be a no, because what's going on in the Chinese credit markets is a lack of cash. They have literally no cash available that's going on for at least as far as regarding to Evergrande. They have a shortage of cash to maintain their operations. So now it becomes a situation where if the Chinese banks start getting the squeeze, aka they were dependent upon Evergrande repaying back their loans that they made to Evergrande, aka they bought their debt or they loaned the money or invested into them, and now they're all of a sudden finding themselves shorts of revenues, then the shortage of cash means that quite literally that the banks will start selling off any type of asset that they own in order to get the cash off the market, and that includes precious metals. So I think that's what's been going on for the past week, is that there's been a lot of dumping of precious metals, probably in the Asian markets, and most likely by those Chinese banks. Some of them may have been stocking up on precious metals to use as some sort of reserves or emergency buffers or a way to hedge their investments. They started selling those in order to raise up cash liquidity. It could also be other types of banks and investors that have been going on or have been keeping an eye on that market, as all of a sudden cash is becoming the necessary item to hold here. So it's ironic that an inflationary system would cause a shortage of cash, but you have to remember it's a shortage of cash faced with higher prices. So what causes assets to deflate is that the asset prices reach so high that there's literally not enough cash to keep up and meet that, or create the demand enough to meet that price at that level, and so the price must come down. Prices come down because, quite frankly, there's a shortage of cash relative to those prices. So in Evergrande's situation, they started selling off a lot of their physical assets on the market. That started to deflate those prices of those physical assets because it brought them out to market and it increased the supply available. Because of that, asset prices are starting to drop. It's also soaking up liquidity and cash in that situation and system. And so now with the face of falling assets and such, it could cause a reversal of the debt that has been loaned out. All of a sudden, the values of collateral assets become less and less and less because the collateral valuations are starting to drop, which means now that positions have got to be closed down on debt and lending, because you can't lend it out against collateral so much. Not only that, it could cause tighter credit standards, which of course is inherently deflationary, and so it would drop that price over time. I think a similar situation is what's developing inside the U.S. bond markets as well. Again, the Evergrande situation means that there's been a flight to cash. Unlike in an inflationary situation where there's a flight to goods, which is what drives up goods prices, there's now a flight to cash, which drives up the valuation of currency, but that means dumping whatever securities or assets you have to get a hold of that cash. In this case, if China is dumping assets, they hold a lot of U.S. debt. Some Chinese investors are probably dumping some of their holdings of U.S. treasuries and then converting that back into yuan, because the name of the game is to get a hold of yuan cash. Essentially speaking, there's a shortage of the yuan available in those markets, and we might have seen that a little bit in the Dow Jones. Now, going back to the bonds, to the U.S. Treasury markets, I think what caused the real spike up here was the hawkish tone that the Federal Reserve is starting to take, relatively speaking, signaling that they're going to end their asset purchases of mortgage-backed securities and U.S. Treasuries by the middle of next year. I think that was earlier than what investors anticipated. So that started to raise the interest rates on U.S. Treasuries and started, causing this sharp increase of 0.15% in 2 days on U.S. Treasuries, which is going to have an upward pressure on those treasuries and a downward pressure on precious metals. And I think that's what's going to keep those precious metals downward. So interestingly enough, we're in sort of like a semi-deflationary moment of assets that have been going on. It's going to weigh down on stocks as well. So in reality here, there's nothing that's going to increase in value for the next few weeks. If anything, we could see a rebound in precious metals as the uncertainty over the debt ceiling causes a dumping of equities and causes a dumping of bonds, and that money has got to go somewhere. And yes, it could go to the dollar, but it could also go to precious metals and do a rebound there. It's not certain whether that will happen or not, because it's nearly impossible to predict what's going to happen with investor expectations and investor behaviors when faced with panic and crises. Most notoriously, they will go for the asset that is rarest or hardest to hold. In this case, if there's a debt default, if they really think that there's a debt default, on one hand, that's deflationary to assets because everything has been leveraged according to debt, and that leverage must be reversed, which then drops asset prices. On another hand, the uncertainty of the U.S. actually defaulting on their debt on their debt means that there may be a drop in the valuation of the dollar, because it could prompt a massive dumping of U.S. treasuries, which means all those dollars that have been shipped abroad come home, chasing goods and services, driving up inflationary prices, including precious metals. So there's an argument both ways that it could be bullish for precious metals or bearish. Which way it's going to end up, I honestly don't know, but my guess is that we'll see some sort of rebound in the precious metals, maybe not too strong. But as far as equities and bonds are concerned, it's probably going to be bearish for the next few weeks. Guys, that's my take on it right now. There's a lot of data points that are going to be coming out this week that I'm going to be looking for, so I'm probably going to be posting several videos this week. Keep on the lookout for those. If you like my channel, make sure you click like on this video. Just show me some support. Subscribe to my channel, click that notification bell so you're automatically notified when I upload the next video, and I'll be uploading more throughout the week. I'm definitely going to be keeping an eye on the money supply numbers, the revision of the GDP numbers, the third revision, as well as the GDP by industries, the output numbers that are coming out, the jobless claims. So there's going to be a lot of interesting data that's going to come out that will give us a clearer picture on the U.S. economy. Until then, I'll talk to you next time, guys.